Hey, everybody, Hop Sauce checking back in with you here. Inflation numbers are out, okay, and that's what I'm talking about today. And it's crazy because crypto just pumped. Okay, stocks are still trying to hold up. Okay, we are. It's some of the S&P keeps moving up, but the inflation numbers are reminding us as investors that hey, this market is not out of danger. Inflation is high. Okay, I'm not a doom and gloom guy. I'm just not. I'm overly optimistic, sometimes to a fault, but I'm not saying everything's going to crash tomorrow. It's what I am saying is it's an environment where I don't want to just blindly go and put my money in the market. As you get more experience and more savvy as an investor, it's funny. It's kind of opposite. Like as a new investor, you're more willing to just throw money in there until the more you learn, the more strict and tight I am with moving my money around. It's kind of a weird dynamic. Let me know if you're experiencing that as well in the comments there. But so the market, it seems like it wants to celebrate, but the inflation is still saying that it's holding the Fed up. You can't move too fast when this inflation's high like this. It's crazy. So it's called. So the latest PCE inflation numbers came in hot. PCE stands for personal consumption expenditures. Okay, it's an inflation gauge that the Fed watches closely. Okay, especially for the core PCE, but it helps show whether inflation is really coming down or if it's staying sticky, right? That's kind of what it's all about. So that's the PCE. Okay, report today show the July PCE is around 3.7% year over year, with core PCE about 3.3. It's still above the Fed's 2% target. That's according to Reuters. Came out with that. Okay, now if inflation stays sticky like this, the Fed has less room to cut rates, okay, or loosen any kind of financial conditions. They just can't do it. And so the market also reported that stock futures slipped. Treasury yields moved higher. That's the rates after the higher than expected inflation report. That's where we're sitting, people. Look, the numbers don't lie. I'm bringing this stuff to you because this is the reality of everything. Here's the main point. Okay, stocks, especially growth stocks with the AI names, they're very sensitive to the rates. That this is a known quantity. This is a fact. So when rates stay high, futures earnings are discounted harder. Be aware of that. Okay, it puts pressure on the expensive names, especially the companies that are already priced for protection. That's why, look, NVIDIA and Meta and these companies, they're amazing companies. Like, you can't, in your lifetime, in our society, these companies are just incredible additions to humanity, right? But I'm being careful. Like, I want to buy NVIDIA because it's actually priced okay right now, but this is why. Okay? And the fact that they're very sensitive to the rates, I think rates are going to go up. Look, I do think they're going to come back down towards the end of 2027 for sure. I've been also seeing some stuff like that. So, but right now, short term as we speak, that's why I'm 50% cash. I'm on the sideline. It's a good position to be in. I'm just sharing this with you because this is me personal. I'm doing some things that is working for me. Look, if you're buying after a big rally, you got to know whether earnings and valuations actually support the price, the big run up. I've been talking about the AI bubble, comparing it to the .com. Look, it's not going to crash as hard. It's just not. It's a different environment, but I think we are going to see a rollover where things are trickling down like a slow bleed. Okay, I almost hate that worse. Now, let's see, QQQ, NASDAQ, AI stocks, NVIDIA, speculative growth stocks can all feel pressure if yields are high. If the market believes the rate cuts are coming, crypto can pump. That's what happened with the last pump. That 30-year yield rolled over and went down from 5.34 down to 5. And so that's why the risk on came into the cryptocurrency real quick. What's happening now? Look at those charts I showed you yesterday. It's moving sideways. People are taking profits. It's consolidating. It's not going to go up anymore at this time. Okay, I'm warning people not to chase. On that last crypto pump, you'll have another chance. Don't do it right now. Don't put money in there. This is not financial advice. It's just what I'm seeing. Okay, it was a real pump, man. Congratulations if you were able to take some profits on that. Consolidation after a pump is totally normal. In this particular scenario, I think it's going to be a bull trap. That's why I'm talking about you have to see the confirmations on these levels before you decide to get back in. I believe it's a trap. And remember, everybody, when you pull money off the table, it's not because you're lacking any other strategies. It is a strategy in and of itself. I hate having cash sitting there not doing anything because it's losing money for high inflation, but it gives you more options when it's time to make a move. Okay. I've learned that forcing trades in this confusing type environment with high inflation and things like that is how mistakes happen. That's how investors make mistakes. When we're pushing and forcing things. And I do it with day trading. It's really a human psychology thing. I'd rather miss the first part of the move and verify the change in direction than chase the top on a fake breakout. Okay, that's true investing 101 in different markets. I'll finish up here, but that's why I like the covered calls, the slow and steady selling puts. It's just it's smaller percentage gains. It can be higher if you do it consistently, but these are safer, slow and steady investing techniques. It's been working for me. Okay. Trust me, we all want to see the huge blow-off gains and stuff like that, and it's just they're there as swing traders. It is there, but it's just a little more risky. Okay, options aren't magic. It's just another tool that you can put in your box to use these things. Okay, now I need to look. I only have one position this whole month on a call position. It's going to expire next week. So it's kind of boring. I usually like to have 4 to 6 cover calls and puts in play, but I'm trying to figure out what's going on. September historically is the worst month in the stock market, so be careful. That's what we're coming into right now. That's another reason why I'm sitting on cash still. So thanks for checking in, everybody. If you want to look at any charts, I got the TradingView link down there, as well as my cover call checklist. Which is free. Okay, they're all free. You just need to put your email in there so you know where to send it. Hey, Hop Sauce Investing coming at you. Thanks for checking in. Independent thinking and real investing is what we like to focus on here. All right, give me that thumbs up, everybody. Appreciate your time. Enjoy the rest of your day.